So let's start. So during this call, we're gonna talk about the inducement theory. Everyone's seeing this new technique or new idea on YouTube that the most likely the name is elite concept. There is a lot of, let me mute everyone. Okay, so who's came with this idea? Some people says they are the WWE community, and others says that it's old concept from ICT themselves. So it's all about liquidity in the end. So now I will show you a graph where we simplified the inducement idea. So I'm gonna start with trying to simplify everything, okay? So the inducement by definition, or the definition of inducement, is a thing, okay? Is a thing. So let's keep this here out of the box, okay? And then we're gonna come to explain every part of this definition, okay? So the first thing is a thing that produces or leads, okay? It's a thing that produces or leads someone to do something. So this is the definition from Google. If you go to Google in the research bar and write inducement, this is what you're gonna get. This is the definition. So let me show you that on Google. Okay, let's open. Okay, give me just 1 minute. Okay, I will show you the definition from my laptop. Okay, so I will share it again from my screen. Okay, so this is the screenshot from Google. So this is the definition of inducement, okay? So now let's come back to the trading view. So like we said, it's a thing that produces or leads someone to do something. So we're gonna come to every part of that definition to identify what is that thing that produce or leads, and who is that the someone, and what is the thing that we're gonna do or that leads us to do it, okay? So we're gonna start from this point. It's a thing. So that thing in trading is market makers or institutional or the big players, okay? Then that produce or leads is that they create or generate or print patterns, okay, by buying and selling at specific levels, okay? So we have here a thing is the market makers, institutionals, big players that create and generate or print in the chart specific patterns by buying and selling at specific levels, okay? So by taking actions like buying and selling, so let's correct this one here, selling at specific levels, they create or print in the chart specific patterns, okay? To lead or someone who is the someone that they want to lead it is the sheeps or small traders, those who are affected by the propaganda of social media or any different things, okay? Those who learned retail strategies or retail concepts, or every strategy is a famous strategy. So likely now, the smart money concept, it's a famous concept. So it's a new retail concept, okay? The last point is to do something, and that thing they want us to do is do an action, and that action is buying or selling. So when we see those patterns that they generated or printed in the chart, we're gonna take an action, and that action is buying or selling at specific levels they already knows about it, and that what create or create liquidity. Okay, so this is the definition or the simplified definition of inducement. So we can say that every kind of liquidity actually it's inducement. Okay, But at that specific video, we're going to talk about some very, very important points of inducement where price move very, very fast. Okay, so I will avoid talking about the classic liquidity like trend lines or equal highs, equal lows, okay, the channels. So I know that those patterns are liquidity, but we're going to talk about a specific point where they are actually inducement or liquidity inducement, where we induces traders or trap traders to take or to set their stop losses at those specific levels. Okay, so this is correctly, so everyone got the idea here, the general idea of inducement. Okay, so now let's go to the chart to see. So we still have here something to talk about it later. So let's now go to the chart to see specific points where the market moves or reverse at specific points, and let us understand why those specific points where the market moves. Okay, why the market reverse from this point, and why the market reverse from this point here to this point, why the market moves from this point to this point and from this point to this point, why the market moves from this point to this point, and why the market again moves to this point, and from this point dropped massively to this point, and again push it strongly to this point here, and again push it to this point, and then from this point push higher. Why? So when you ask yourself those specific questions, you're going to understand that there is something at those levels when I draw it, those lines. So now we're going to come back with the chart or drop to lower time frames to see what those highs represent. Okay, so now let's drop to the 13 minute. Okay, so when you look for inducement, let's come back here, okay, to this point here, and delete one. Where we can look for inducement, so this is mostly the most point where you can look for inducement. Okay, between sessions. So the intraday traders, there are the most targeted traders to be an inducement, also the scalpers. So if you know where the intraday traders and the scalpers traders set their stop losses, so you know where is the inducement. Okay, the previous day highs and the previous day lows. Okay, so when you look for inducement, keep in your mind the previous day highs and the previous day lows. Okay, highs and lows that is close to valid point of interest. So if you have, for example, an order block, let's draw it here. Let's say you have here, okay, let's say you have here an order block and price come all the way close to the order block and then push again. So this is very, very dangerous point, or the order block that created here, because the price will come here, give some reaction, induce the traders here, and then come to the original point of interest and then drop. Okay, so this is when you need to keep your eye at these specific highs. Okay, so let's continue. So keep those 4 points in your notebook. Okay, we're gonna come back to every point of this later. Okay, what we said between sessions, I mean between sessions that where we have, for example, London, New York, and Asian session, every high that created during those sessions are probably points of inducement. Okay, okay, so let's delete this one here and come back to the technical parts on the chart. So here we're gonna start from this point here and all the way to this point. After we explain the whole idea, we're gonna come back to EURUSD from different broker and explain how I took some trades from this point and another trade, how I missed the trade from this point. I think we have also a trade here by the inducement idea or inducement theory. Okay, let's come back to Wanda broker. All sessions, brother, all sessions we can consider it as inducement. So depends on the higher time frame view. So we're gonna come back to this later, okay? So now let's see here, for example, at this point here, let me use this tool. Here it's a classic liquidity, okay? This one here, it's classic liquidity. We have the trend line. So we induced, first of all, this low here. So to understand, this is not, this is Frankfurt, I think, Frankfurt low or Asia low, I think. Let's drop more to lower time frames. Okay. Which they don't get it, please, can you turn off your video so the screen can be blank? Which video you talk about? So let me check. Okay, didn't get it, brother. I think if you don't see the whole screen, let me share it again. I think I don't know how to share this one here. Anyway, okay, so let's continue. Okay, let me continue. Okay, brother, stop sending messages. Let me continue the explanation and then we'll talk clearly with. So here at this point, so during that specific day, what we have here, so we induced this low here, okay, and if you look very carefully, you're gonna see that we have here a belt of liquidity, okay, the trend line. So we induced the trend line traders and we induced this low here, specifically this low. Why? We have here a clearly smart money trap. Okay, so you need to see at some lows there is a trap or something or a reason where other traders look to buy or to sell. Okay, brother, you are using a phone, so you need to turn your screen. Okay, it's not my fault, it's your fault. Okay, so let's keep. So here we have clear reason where the traders looking for buy, so we need to induce them. Okay, this is the first inducement. This is the first point. The second point, we induced the traders here, the smart money traders, and then we're gonna induce or take the trend line traders. This is the second point. Okay, keep in your mind that all the lows are also an inducement. So at this specific low here, that represent at this day the lowest point at that specific day. So when we start a new day here, when we start the new day here, when we start the new day here, this will be the previous day high. Okay, so this point here, it's an inducement. Keep that in your mind. So now we took the trend line traders. Why we took the trend line traders? Why? So the reason is we give them a reaction. Do you see here? Let's check the 30-minute. Okay, so we give them that rejection and we give them that doji candle. So a lot of retail traders that consider a retail trade, consider the doji candle, specifically how we call them, those traders who use the candle formation, the form of candle. So they use the doji candle as a form of reversal. So they call this, I think, evening star or the hammer. Anyway, so they give specific names on candles. So they consider this doji candle as a reversal. So they take the trade from this point and set their stop losses at the high. Okay. Anyway, reversal pattern. So they target the support and resistance here. So clearly here we have support and resistance, like you see. Let me use clear tool. So we have multiple rejections at this level, so they consider it as support and resistance. They will target at this point. So market give them a reaction and then take them out. This is why we took the trend line sellers here. Okay. Okay, so it's called, some of the members says it's called reversal hammer. Yeah. So at this point, we took the trend line traders, the sellers. So at this point, at that specific day, here we started our Asia session here. At this point, we have London session. So let's use our, or okay, let me keep it. So let's continue here. At this point, we have, let's drop to the 5 minute. Okay, let's come back at that specific day here. Okay, so here at this point, we know that the Asia high, it's a point of liquidity. So you know the story behind why we consider Asia high and Asia low as a point of liquidity. I will not repeat the story. Okay, so here we induced the Asia session traders. When we see that strong push to the upside, it's a kind or a sign that we're gonna take those traders out, that selling at this point. Okay, we can see that we still have here another kind of inducement on lower time frame. If we draw it here, we have clear trend line, small trend line. You can see it on the 1 minute. We induced the trend line traders at the lower time frame and then dropped massively to the downside. So now let's continue. We targeted next the support and resistance traders. So why we targeted them? Because we give them the reaction at this point. Like you see, price when came to that level, give them this push and then massive drop. To market will not give them any time to close their positions or to move to break even. So they took or they set a buy limit at this point or market execution at this point. In the end, they will set their stop losses here below that level. And then we're going to see the massive drop to the downside. Okay. So at this point here, price continuing to the downside, but didn't take this low. Okay. So we can say that this low with this low, a clear liquidity. So now during that new day, so we're gonna open, so let's say this is, okay, let me use, so we have here our specific day, this is our new day. So what we said, what we did at this day, we induced the Asia high, we induced London session low, and then we pushed all the way to take the previous day high at this point. Okay, and at this point, let me draw it properly. We started a new day here. What do we take? Take the previous day high, and before taking, after taking the previous day high, we took also the Asia session high, and then we dropped to the downside. We generate here some kind of trend line. We took the trend line and dropped, generate more support and resistance levels here. So let me draw it clear. So at this point, let's zoom in. What we did, we took the previous day high at this level, and then we took the Asia session high with this. So I will repeat that. When you see a huge momentum or strong momentum, this is a sign of a close or a swipe will be happen soon. When you see specifically during London Open or Frankfurt Open or during New York Open, you're gonna see some kind of strong momentum. This is a sign of a swipe coming soon. Okay, at this point, we swept the Asia session high, and then we dropped to the downside. We took the Asia session low, and at the same time, we generate a trend line liquidity here. Okay, so let's draw it. Okay, let me use this point here. Okay, so after seeing the trend line traders swept it, you're gonna see reversal. Of course, we took the trend line traders at this point and we drop it to the downside. We generate more liquidity here at that support and resistance level. Then during Asia session, we took the support and resistance level traders and then push it strongly to the upside. So now I want you to watch with me or seen this move here. What do you think about this whole move here? So remember, this is a nice push to the upside, but it's fooled or it's all inside the Asia session. So let us check the lower time frame. So let's draw something and then let's drop to the lower time frame. Let me draw something here. Okay. So now let's use the replay mode to keep us at this point. So you can also look for another kind of inducement if you draw it like this. We have here another kind of liquidity. This high with this high with this high, called and consider it as a trend line. Why we can consider it as a trend line? Do you see this push to the downside? This considered as on the retail traders, they will watch this move here as a fake breakout, and then the price will continue to the downside. They will sell at this level here and set their stop losses above this high or at this high. This is why we see a strong push to the upside. We left this fair value gap and then pushing all the way to take this high here. What represent this high? Tell me what this high represent. If anyone in the chat, can you tell me what this high here represent? This specific one here. If anyone here? No, what represent? The previous day high. Again, this is the previous day high. So now before taking the previous day high, let's see what we generate with this whole move here. Let me draw it with this tool. So this yellow, the yellow box here, let's drop to the 1 minute and see what we have inside this box here. Okay, this ugly, let's delete it. So it's now looks clean or clear. Okay, let's draw it. Okay, so now what is this? For retail traders or those who was retail traders before, what is this? It's clearly a channel. It's clear channel. Okay, traders trying to sell and buy and sell inside this channel. Okay, why before when we start our this Zoom call, I said that inducement probably will be on this where the scalpers set their stop losses, or on the point when the intraday traders and the scalpers most likely look to sell and buy. This is when you need or where you gonna look for inducement. Okay, because why? Because the algorithm cannot change the higher time frame trend. Okay, so the algorithm will target where there is the most people. Okay, where the highest number of traders will be. So we know that there is only few people who are swing traders, but there is much bigger number trade intraday, and there is a huge number who scalp. Okay, so now clearly we induced. Let's come back to the 15 minute. Okay, so let's delete this one here. Okay, let's come back at this point. So clearly, let's use the purple line to draw it clearly. Okay, let's use this one too. So it's clear, 2 lines. So we induced the previous day high, or at the same point, there is also another kind of traders who consider this point here as a support and resistance level. We have here a double top, this high here also, they consider it as a support and resistance. Okay, so we induced the previous day high traders or the previous day high. We took the Asia session high, we took the channel high part, the highest part of the channel, and then on lower time frame. Okay, let's come back at this point, and at this point where we drop to the downside to target the Asia low, at the same point to target the smart money traders we have here a clear order block. The new smart money traders that looks for only order blocks. Believe me, I was a smart money trader. I was looking for order blocks even inside each session. So we give them some reaction here, nice reaction, and then immediate drop or massive drop to swipe the liquidity below. Okay, so what we have here, this low here represent a previous day low, but why we didn't induce this specific low and reverse? Let me draw it. Why we didn't reverse to the upside after taking this low? Because we still have a huge liquidity below, a double bottom or a double bottom here. Okay, so at this point we induced the double bottom traders, the two old previous day lows. This is previous day low. It's not a high. That's okay. Another one here, and then we push it strongly to the upside, where we have here a clear another smart money trap on the 2-hour time frame. So let me check again. A clear smart money trap here. So we give them the reaction specifically for the aggressive traders who set the entry here and the stop loss here. And they target the next low for 5-hour. So we give them some nice reaction and then massive push to the upside to take all the traders here. So let me delete that ugly line. So here where we need to add another idea with inducement to know where is the higher time frame perspective. We need to add the internal and the external liquidity idea. So we clearly here we have internal liquidity range where the price move it from this point all the way to take this low here or to induce this low here. Okay, so let's come back to lower time frame. Here at that specific day here, we have each session high, we have each session low. So here we have slow move during London session. Let's drop more to the 5-minute. So we generate here a clear liquidity above London session. Also, we have here a clear trend line liquidity. So during high impact news, we induce the trend line liquidity, or the traders who try to sell at the trend line multiple times, we took them all out and then we dropped massively. Okay, so at this point, where is the target? Here we generate more liquidity, like we said in the first idea: generate, create, or print patterns. So here we generate and create pattern at double bottom. At London session, we took the liquidity below the double bottom and then we push strongly to the upside. So this here where the market closed. So now we know where we're gonna look for inducement. So another note, that inducement happen in the most times where when you look for inducement, or what is the time that you need to look for, what is the window time or to check. Okay, so no, you need to look for during London session, open sessions during London session, during the kill zones, during the New York open. So you need to keep your eye at those specific times. Okay, so most likely the big inducement will happen during those times, especially for example this one here, we swept the previous day high, we swept this previous this EJ session, we swept the channel traders. So when you see multiple kinds of liquidity got swept, then prepare yourself for a massive huge move. Okay, so here we swept it multiple form of liquidity traders, and then we had this massive move to the downside. Of course, if you got the short from this point, your target will be the equal lows here. Okay, so this is this is the whole idea about inducement. So you need to keep your eye also on the smart money traps. Okay, so this is from intraday perspective. There is also inducement on the lower time frame idea, on the 1 minute, on the 5 minute. You can see a lot of inducements ideas, but keep your eye to learn how the medium, this is what we call the medium inducement. Keep your eye on the medium inducement between sessions, intraday inducement, some higher time frame smart money traps like this one here, and then drop slowly to the lower time frame inducement to check the minor inducements, okay, that happen very quickly. Okay, so now I will open a new call. Okay, so I will give you 10 minutes to prepare, or for the next call we're gonna break down the EURUSD trades that used the inducement idea to take during the last 7 days, and then the second half of the next call will be give you the chance to ask questions. Okay, so this is what we're gonna do for the rest of this, or on the part 2 of this call. Sorry, a little bit sick. Okay, so can you explain on gold, bro? So sorry, bro, I will not. So this is this call specifically for inducement. So we're gonna use this example chart. There is a lot of examples here, enough. You can check gold by yourself. Okay, so now let's move to the other chart. So now we're gonna explain those trades here. Let's come back at this level here. Okay, let's drop to the 4 minute. We're gonna talk about this trade. We're gonna talk about those 4 trades here, and we're gonna talk about also another trade that happened. Maybe some of you already seen the breakdown on those trades. Also, we're gonna talk about a trade from this point here to this point. I miss it. So those are the trades we're gonna talk about during the part 2 of this call. So stay tuned. I will send the new link in 10 minutes. Okay, so we're gonna close this call and recall it again in 10 minutes. See you in the part 2 of this Zoom. So peace. Okay, so let's go. So we're gonna start here. I will not delete the drawing from the chart because there is a lot of details on the lower time frame. I will not remember it if I delete it. So we're gonna just break it down like that. We're gonna come back all the way to this point at that specific day, and then we're gonna talk from a lower time frame perspective. Okay, so now let's come to this point here at that specific day. So so we have here at this point we have Asia session. Here we are in during London session. So we're gonna drop to the 1 minute, maybe to the second time frame, and explain everything. Okay, so let's move on to okay, so at this point we have here clearly we generate more liquidity. We generate a trend line here. We induce the trend line traders. We took this high here also. We induce this high support and resistance trader on lower time frame. So at this point, after the inducement, we've seen a huge push to the downside. Okay, this is the break of structure, the valid break of structure. I set my limit at this fair value gap. Why? I can take the trade from this supply, but I choose the fair value gap to avoid missing the trade. Okay, because I believe in the external and the internal liquidity concept, even on lower time frames. So at this point here, the trade the stop loss was 3 pips. Okay. So now we're gonna talk. We have here double bottom. We have the Asia low to be a target. So we have 2 forms of liquidity to be a target. So the first point, we build here on the 3 minute clear supply for smart money traders. It's a very clean supply. Okay, so I will tell you why this consider it as a smart money. What we said in the part 1, we said that above those highs where the smart money traders set their stop losses, that it's a pure inducement. Okay, so at this point we swept the EG session low, we took the double bottom traders, and we generate another trap. Okay, you need to know where is the trap. Okay, so at this point, at this specific point here, let's check the 15-minute, I think. Not the 15, the 5-minute, not the 5, the 10-minute, I think. Specifically at the 10-minute, yeah, on the 10-minute, we sweep the liquidity and we generate or print that order block. That for me is a smart money trap. So let's talk about the highest trap here, and then we're gonna talk about that trap later. Okay, so here clearly on the 3-minute, a lot of traders will look for that order block to take a short, but they forget that we still have a highest one or more premium zone with a clear fair value gap need to be reached. Okay, so at this point we took them because there is a lot of traders will set their sell limits without any, because they already on lower time frame, they already on the 3-minute, so they already set the limits here and the stop loss is above this high. So above this high we have the liquidity, the inducement liquidity, they will target this low. So at this point they all took out. So this is what lead me to take this trade here. We took the smart money traders, we filled the fair value gap, we tapped into the premium or the more premium supplies on here or order block here. At this point here, I took the trade from the 15-second time frame where I see this breaker block with this fair value gap here. So I set the trade at this point here to avoid missing this trade. I set it at this round number, but the terminal activate the trade at that specific point. I still have the screenshots about this trade. So also we generate this high here, need to be induced this high, because there is already a traders, a smart money traders who trade the second time frame, they will take a short from this small supply here. I know some kind of traders, I already know the traders who set their stop losses here or even here above that order block for very, very tiny stop loss. They will be took out. This is why you're seeing immediate rejection after taking some highs, because there is already a trader set their stop losses here or at those points. Okay, so we took this high. The price didn't come back all the way to this breaker block, but let me end this trade and keep your eye on this high, because this high in the future will be considered as an inducement. Because there is early traders move their stop losses to break even. This is why we consider this future inducement. So now, oh, this is very annoying. Let's delete the old drawing. Okay, let me display disable announcing. Okay, so let's continue. So what we said about this point here, smart money trap on the 10-minute. So here at this point, price just came all the way to this fair value gap, but at just after tapping into the fair value gap here, and there is another fair value gap here anyway, price reverse strongly. Okay, so the smart money traders will consider this low as a liquidity and they will wait for price to come back, take this low and tap into the order block and fill this fair value gap and then push to the upside. Okay, so this is what they look for. Okay, so here I took another trade. Let's drop more. So why I took this trade? Because I seen here this high got induced and we broke through this low here, and I seen more liquidity got generated. Like you see here, let's drop more to the 13 seconds time frame. So I seen this trend line, the first touch, the second one, and the third one. I see the trend line get taken out, and at this specific point, I took my trades, my trade at the 10 seconds time frame at that order block, and this is my break of structure. Okay, so I set the limit here. I am in the trade. I seen more liquidity generated below here, below those lows. When I see this third touch here, so it clearly triple bottom. So I was excited that the price will continue to the downside. Moved my stop loss to break even for this position and to break even to this position here, and price at this point take me out. Why? Because price trying to induce this high or to take this high, because there is early traders who move their stop losses to break even, and there is another traders who trying to short from that order block here. Okay, so there is another smart money trap. Exactly by a pip, price reverse it after taking this high. This cannot be a random. Okay, this move here after taking this high, this 13-second high here after taking it, price reverse it strongly to the downside. This cannot be random. It's huge or it's clearly a manipulation. So here I took another trade at this. This is the supply I was looking for. So I waited for price to respect it first. Okay, so price took those double top at the lower time frame, and they respect this supply and broke structure to the downside. And then, sorry, I set my stop loss at this gap here. My trade, sorry, my entry was at this specific gap here. Okay, so this is my fourth trade. So we have here break even, and this one here got already hit hit the TP for 8R, and this is the fourth trade. Okay, so this one here move it or played out perfectly. Okay, so at this point we generate more liquidity, or we print a new pattern to trap more people. So here we have double bottom, we trapped or take the we take the double bottom traders, we generate that trend line, we took the trend line traders, and we tapped into the last supply here, or the last point of interest at this 13-second point of interest, and we played out from this point perfectly. We generate more trend line here, more traders, and then we took them out. So the smart money traders still waiting here. They set their entry here, the stop loss here. They try to target this high or some highs here because they seen here some trend line liquidity here. So give them some reaction and immediate drop to the downside. Okay, this is why we consider this low here considered as an inducement. Okay, so we still have this low here, and the price for the rest of the day during New York session dropped massively because we have here clear huge high impact news here at this point. Okay, so at this low here, with this low we generate more or print more, or trying to generate liquidity below here. We're trying to trap more people at this point. This is why we've seen price push all the way from this point. So like we said, this high here will be an inducement. Okay, so let's come back to the 5 minute. Okay, so here price generating some kind of trend line. Let's move to the 15. Let's make it quick. Okay, so at this point we have EJ session high. So let me say we have our EJ session high, like you see, and on lower time frame above this high we still have some kind of fair value gap, like you see here. This above this high, this is the fair value gap I was looking for at that specific day. So at that specific day, this is my point of interest. Just inside this fair value gap, this is my point of interest. Okay. So here we print more liquidity, or we print a pattern that will lead to generate liquidity here. Okay. So at this point here, I was looking for this trend line to be swept, the EJ session high to be swept, and then tapping into the fair value gap, and then looking for the real move. Let's delete that. Not this. Okay, let's drop more to the lower time frames. Okay, at this point, this trade was sent to the team, of course. So let's drop. Okay, so here, like you see, we generate a trend line. We took the trend line on the high, or from the sellers, we generate here. You need to remember that you need to look for the perfect time. So there is a relationship between time and price. Okay, at this point, we have trend line here, and we have a double top here. We have our trade or the hours limit. We set it here. So let's see. We've seen a huge push to take the double top traders. Our trade got activated, and we have the reason to drop because we have trend line liquidity here. So what is the probable target is the liquidity that we generated or during that specific day. So personally, I didn't close my trade here. This trade ended up with hitting TP because of an error I did, or a fault I did. It's psychological fault because I was greedy. I was trying to target all the way this low here that got taken out later. Okay, so at this specific day here, took the liquidity below the equal lows, and then the high impact news push all the way to take my stop loss. So now what we have on the 2 hours time frame, not this one here, let's continue. Okay, so now price during the next day, okay, this is for the rest of the day. During the next day, we took the previous day high that considered as an inducement. We have here smart money trap on the 10 minute time frame, like you see here. This is a clear smart money trap, okay, because we have the previous day just above it. So this is why we consider it as a smart money trap. This is why you're gonna see some reaction and then immediate push to the down, to the upside. Now here in London, we're gonna wait for the perfect time. Here in London session, here I think during New York session or the next day, yeah, I think for the next day. Let's check the 2 hours. Let me remember which one. Okay, so not this one. Okay, let's continue. Okay, so here at this point, we generate trend line liquidity. We took the trend line, we reverse it a little bit. Okay, let's move to the 15. Let's make it quick. Okay, we took the equal highs or the double top traders, we induced them and dropped to the downside. Okay, at this specific day, okay, we induced the equal lows here, like you see. And we built this channel all the way above the previous day high and above those equal highs and mitigated this supply. Okay, so at this point here where I missed a perfect trade, so this is the possible entry from this point or from this point here, from that order block. Okay, I was looking for this supply here or the last point here. This is why I missed my trade. The price didn't come back to this point here and drop immediately to the downside. So you already know the rest of the story. Price drop it all the way to take or induce the double bottom traders here. We generate more liquidity here. And then specifically on the 2 hour time frame, we have here a clear smart money trap. Okay, this one here. So we took the smart, not valid supply, let's keep it smart money trap. And then we push all the way to this on the 3 hour into this internal range liquidity. Okay, and then we dropped to the downside. Let's talk about this inducement, another form of inducement here. Let's keep it on the 15 minutes. here at this point, like we said, the trend line specifically, we induce them during high impact news, and then we drop to the downside to induce this low here. We generate more liquidity before that, and then during Asia session, we have the Asia low, the Asia high, we induced the double bottom traders, and then we push all the way to the upside. So this is for EURUSD, this is for the breakdown of those trades. So we, in the part one, we explained the whole idea here, okay? And those are the trades that we took, okay? So this is the whole idea of inducement. Now I will let you ask your questions. I will, so if anyone have a question, go ahead through the chat. You can ask your questions in the chat, okay?